Hello everyone, I'm Garry Morin The BowTieGuy, and this is the Bowtie Breakdown. Once again, I'm on the road. I am here with my friend Peter Nastasi at Sierra Pacific Mortgage in North Providence. Good morning, Pete.
Good morning, Gary.
Peter is here today to tell us about buying points. We sat with Peter last week and he explained the 2-1 buy down, which is very different. So Pete, can you kind of fill us in, like what's the difference between these two programs?
So to kind of explain it without making it too complicated. So the 2-1 buy down is basically, it's a little bit different. It's not, the borrower is not paying points to buy down their interest rate. So let's say their interest rate is 6.5 today. The 2-1 buy down is a very calculated step. It's their rate is actually 6.5.
Yep.
But the first year it's going to be, they're going to make a payment based on 4.5. Second year they're going to make a payment based on 5.5. But during that time frame, the actual payment due is based on 6.5%.
Ah, okay.
So where discount points are a little bit different is, let's say the rate today is 6.5.
Yep.
If a borrower they want to pay 1.5 to get that rate down to say 5%. Let's just use that as an example. They are actually going to have a 5% rate for the full term of their loan.
Ah, okay. So there's no change in difference after a couple of years.
No. That's their rate. That's what their payment will be based on, and that'll run for the full term of their loan. So the 2-1 buy down, they're not paying points to bring the rate down.
Yep.
They're just they're funding what the difference is.
Gotcha.
In the payment.
Whereas the buying points, they're actually changing what their rate is.
Yes.
Officially by paying money into whatever it is.
Yeah. So by paying points, when they lock in, this is their rate. So let's say it's, they're buying it to 5%. They're going to be paying at 5% for the full term of the loan, and that's their fixed rate, can never change.
Gotcha.
So discount points definitely a little bit different. Discount points are, it depends on the borrower.
Okay.
Right? Everybody says they're never going to move. This is going to be their forever home.
Everybody says that.
Right?
Yep.
And sometimes people aren't in the home long enough to recoup the cost. So you really have to sit down with the borrower and go over their options. What are they going to spend? What's it going to cost? Is there a benefit? You need to do the calculation with them to see if it's actually going to make sense.
Okay.
Because we don't want people to spend money that it's not going to be a benefit to them.
Yep.
So we really need to do a breakdown to make sure that, what's their break even? Is it 2 years, 3 years, 5 years, 7 years? Because if somebody, they're saying they're going to be in the house for 7 years, but they may only be in the house for 3.
3, yeah.
So we don't want them to put money out that they're not going to recoup.
Gotcha. Essentially, you don't want somebody to throw money out the window.
Yeah, a lot of times paying points, that's what it is, right?
Ah.
Unless there's a reason why you have to pay points. Maybe we need to buy that rate down so you qualify.
Yep.
So that's,
I'm sure with the rates now and some of the buyers out there, we have seen that, I'm sure. I've dealt with buyers that got knocked right out.
Yeah. We have to be creative today. We have to figure out different options for clients so they can get into that home versus, continuing to pay rent. They're still better off today paying for a mortgage because they own this and they're going to accumulate equity over time.
Yep.
So, today as a lender, we have to get creative with our clients so that way they're comfortable and they can get into the home that they're looking for.
And I love what you said, how you just don't want people to throw money away.
Right.
That's what I love about you and Sierra Pacific, because you care about the clients and you're not just shoving them into programs to get the loan and see you later.
Correct.
That's one of the benefits of working with you guys. I know that personally there. So for the buy down of the buying of the points, is there a set fee or a set rate, or is that what you were talking about when it applies to the buyer?
No, it's different every day. So because interest rates are dependent on the market, it could be different. So today rates could be 6.5 with no cost. Tomorrow they could be 7. They could be 6 3/8 the next day. So the points associated with buying a rate down to a certain level, it can fluctuate.
Who determines that? Is that determined by the mortgage gods?
Yeah, pretty much. It's determined by basically the notes and the mortgage-backed securities, and then our secondary team.
They behind the scenes stuff.
Yeah, because it's a whole thing. It's a little over my head too. To try to explain to
That's why I'm sitting down with you today, because sometimes when I'm trying to explain this to buyers, I overstep my lane and I kind of get things mixed up with the 2-1 buy down program. And I appreciate you sitting down today and explaining this with us.
No problem. It's my pleasure.
That was another Bowtie Breakdown. I'm Garry Morin The BowTieGuy. This is Peter Nastasi from Sierra Pacific Mortgage, and that was Buying Points.